Something big is unfolding right now, and it goes far beyond the rare earth squeeze everyone's been talking about. The cuts have already begun. China's exports of rare earths plunged 31% in September, marking the third straight monthly drop, now even lower than April levels. And here's the hard truth. 94% of the world's rare earth magnets, powering electric cars, precision missiles, and advanced chips, are still made in China. That means U.S. industries, from EVs to defense systems, are about to feel real pain. Costs will climb, production lines will stall, and there's no easy fix. Beijing knows exactly where to press. When you control the materials that make modern industry run, you control the pace of your rival's economy. Even European officials are calling it what it is: weaponizing supply chains. Because we're no longer in a phase of quiet competition. Every ton of metal, every shipment, every tariff has become a tool of power. And this time, Beijing is playing the game with iron resolve. The rare earth squeeze is just the opening move in a much larger war, one that's shifting toward ships, factories, and global trade routes. The European Union has already called it openly: weaponizing supply chains. And they're right. The global trade system that once promised stability has turned into a battlefield where every ton of metal, every export permit, every ship route can be used as a weapon. The old idea of free trade has collapsed under the weight of tariffs, sanctions, and politics. We are watching the world's two largest economies dig trenches instead of building bridges. Exports are falling on both sides. U.S. shipments to China are dropping sharply, while Chinese exports to America have collapsed by about 30%. This isn't just a slowdown, it's a deliberate decoupling. Factories that once depended on each other are cutting ties, and global companies are being forced to pick a side. The message from both Washington and Beijing is clear. Economic coexistence is over. Inside China, the sentiment is unshakable. There's no panic, no talk of retreat. Instead, there's resolve. A deep belief that survival doesn't depend on the U.S. market.
Yeah, and China will lose the U.S. market, which, as I've said, is 15%.
We don't care. We don't care. China has been here for 5,000 years. Most of the time, there was no United States, and we survived. Right. And if the United States wants to bully China, we will deal with the situation without the United States. And we expect to survive for another 5,000 years.
That line captures the mood perfectly. Patience, endurance, and quiet confidence. And Beijing is backing that confidence with action. New trade permits, export controls, and sanctions are being used with surgical precision. The strategy is simple. Make sure no foreign industry can operate comfortably without Chinese inputs. The pressure is slow but constant, designed to make Western economies bleed time and money. Washington calls it economic coercion. Beijing calls it self-defense. But either way, the battlefield is expanding, from rare earths and semiconductors to manufacturing, ports, and heavy shipping. The trade war is no longer just about tariffs or deficits. It's about who controls the arteries of the global economy. And right now, Beijing is quietly tightening its grip, preparing for the next front where factories, ships, and capital itself become weapons. While the U.S. is trying to rebuild its factories and bring production home, China is quietly cutting off the ships that keep the world moving. The battle is no longer just about rare earths or chips. It's now shifting to the sea. Shipping is the bloodstream of global trade, and Beijing knows exactly how to use it. Recently, Trump's trade team warned China not to punish foreign companies investing in America. But Beijing fired back by sanctioning the U.S. units of a major Korean shipping group, Hanoa, after it revealed plans to expand into the U.S. maritime sector. The result was immediate. The company's stock crashed by nearly 6%. It was a sharp reminder that China is ready to use the same tactics Washington once perfected. Sanctions, but with Chinese characteristics. The message was clear. Beijing won't allow anyone to help America rebuild its supply chain advantage. Over the last decade, China poured more than $100 billion into subsidizing its shipbuilding sector. The results are staggering. 2 decades ago, Japan and South Korea dominated the global ship market, controlling more than 90% of new vessel deliveries. Today, over half of all new ships sold worldwide are Chinese-built, while the US barely registers on the charts. Over the last 2 decades, China's shipbuilding industry has exploded. Since the Russia-Ukraine war, new orders for Chinese vessels have gone through the roof. It shouldn't be a surprise. Chinese yards now benefit from cheap energy flowing from Putin's economy, which helps them produce ships at lower cost and faster pace than their rivals. Big global shipping companies, always looking to save costs in a razor-thin margin business, are lining up for Chinese vessels. China's yards now produce everything, from oil tankers and cargo giants to advanced LNG carriers. And on the high seas, 1/3 of all vessels in operation today were built in China. That gives Beijing enormous leverage. If the US ever tries to sanction or restrict Chinese shipping, it risks paralyzing global trade itself. As one analyst put it, "You can't sanction 1/3 of the world's container fleet without sinking yourself." Every Chinese-built ship isn't just a commercial victory, it's a geopolitical weapon. Each vessel that sails out of a Chinese port tightens Beijing's grip on the world's arteries of trade. Trump knows the US can't rebuild a shipping industry overnight. America is now inviting Korean and Japanese firms to help restart shipbuilding from scratch.
This massive investment will go toward building out shipping logistics, infrastructure, and terminals, which will create an estimated 10,000 new jobs in America. It's so important because it's about shipping. You know, we lost our way for many years. We haven't done anything. We used to build a ship a day, and now we essentially don't build ships. We're going to start that, and we're going to be announcing next week or the week after a massive new program for building very large, the largest ships in the world.
But as this industrial comeback begins, it's already under fire. The reindustrialization of America will happen through broken glass and barbed wire, every inch of the way. While Washington and Beijing are locking horns, Brussels is spiraling into panic. The latest dispute didn't come from China, but from Trump's sharp warning to Zelensky. Putin will destroy you. It sent shockwaves through Europe's political corridors. Trump's message was blunt. Ukraine must accept Russian peace demands, or face the consequences alone. And this time, there's no promise of unlimited US support. The move has left European leaders scrambling. The war in Ukraine has already drained NATO's unity and the EU's finances. With American aid drying up, the bills for weapons and reconstruction have landed squarely in Europe's hands. In a desperate attempt to regain control, Brussels unveiled another so-called peace framework, a 12-point plan aimed at ending the war. But the terms expose the limits of Europe's leverage. The plan suggests that even if Russia accepts, the 300 billion euros in frozen Russian assets won't be fully returned. A portion will remain locked unless Moscow agrees to fund Ukraine's post-war reconstruction. It's being called a peace proposal, but many see it as a financial trap. The flaw is obvious. Europe still needs Russian commodities, gas, oil, fertilizers, to keep its industries alive. Sooner or later, sanctions will have to be lifted. Meanwhile, Moscow has already adapted. Its reserves remain close to $600 billion, with more than 35% held in gold, worth over $200 billion. Most of the rest is now in Chinese yuan, Chinese bonds, and allied currencies. Euro assets have been quietly dumped. That's de-dollarization in motion, not talk, but tonnage. This is why Russia isn't rushing to reclaim the 300 billion euros. Its war chest is solid, and trade with China and BRICS partners keeps it afloat. For Europe, the 12-point plan feels like another own goal, and the World Cup hasn't even started yet. The message to the world is simple. Assets in the West can be frozen overnight, but gold and partnerships can't. Gold's sudden drop caught everyone's attention, but before jumping to conclusions, let's take a step back and look at what's really happening. The metal had gone parabolic in recent months, shooting past $4,400 an ounce as global tensions peaked. But after such a massive climb, a sharp pullback was inevitable. In a single trading day, gold plunged 6%, now hovering around $4,100. For many investors, it felt like panic. But history shows that no asset moves in a straight line forever. Not stocks, not crypto, not even gold. The rally was fueled by 3 major forces: First, the renewed US-China escalation, tariffs, sanctions, and supply chain battles pushed investors towards safe havens. Second, the US government shutdown rattled confidence in Washington's fiscal management. And third, the Federal Reserve's shifting tone on interest rates sparked fears of deeper currency debasement. Together, they created the perfect storm for gold's surge. But Trump moved to ease trade tensions and the shutdown showed signs of winding down. Some of that fear premium began to fade. Still, this correction doesn't mean the bull run is over. Gold's long-term performance tells a different story. Since 1970, it has delivered an 8 to 10% average annual return, but this year's move was extreme. Compared to the dollar index, gold was up more than 60%, far above normal trends. A correction was overdue. In fact, it's healthy. The fundamentals haven't changed. The global economy remains trapped in a cycle of debt and inflation. Governments from Washington to Beijing are printing, spending, and borrowing at record pace. That's the real driver behind gold's long-term strength. So yes, the price has cooled, but the underlying storm hasn't passed. Beneath all the market noise, the cracks in the system are still there, wider than ever. The US economy is hitting a wall that no amount of political spin can hide. The federal deficit has exploded to $1.8 trillion in 2025. That's about 6% of America's entire GDP borrowed in a single year. To put that in perspective, only World War II, the 2008 financial crisis, and the pandemic years were worse. Washington is spending faster than it can collect, even as tariffs pour billions into federal coffers. The math no longer adds up. Interest payments on the national debt have now passed $1 trillion per year, the first time in US history. That means America is paying more to service its debt than it spends on defense or Medicare. It's the silent tax no one voted for. Every extra dollar borrowed tightens the noose around future growth. But the real danger is the policy trap that comes with it. If interest rates stay high, the deficit will spiral out of control. If rates fall too fast, inflation will roar back. Either path leads to the same destination, a weaker dollar and higher prices. It's the ultimate double bind, and both Wall Street and Main Street can feel it. Currency debasement has become the only way out. The US, Europe, and China are all flooding their economies with new spending to keep industries alive. Governments everywhere are printing to survive, not to prosper. The trade war that began with tariffs is slowly turning into a fiscal war, one fought through debts, deficits, and devalued money. Investors see it too. The surge in gold, the flight to real assets, the quiet shift toward non-dollar reserves, all are signs that confidence in paper promises is fading. Empires don't fall overnight, but they do run out of balance sheets. And as history keeps reminding us, every great power eventually learns the same hard lesson. You can't outspend reality forever. So what do you think? Will China keep tightening the screws on US industries? And will Putin really fall for Europe's latest peace trap? Share your thoughts in the comments. And don't forget to hit the like button and subscribe for more updates. See you in the next one.